Welcome to the weekly market wrap-up. I'm Hannah Bernard. The U.S. stock market shook off international bears, posting positive numbers heading into the final stretch. But worrisome geopolitical events have escalated. Will equities continue to shrug off global events, or is this another warning of turbulent days ahead? Let's get to it. The U.S. stock market had a strong run on Thursday, with all three major indices hitting green in spite of rising natural gas costs and poor economic data from Asia. However, it's a tale of three cities, with the S&P 500 year-to-date closing slightly above parity, while the Nasdaq Composite Index is nearly 3% above its January opening. And the Dow remains the laggard, running negative for the year, now down 1.7%. Now turning over to Canadian markets that had a great week, the Toronto Stock Exchange hit a three-year high on Thursday, buoyed by a jump in BlackBerry shares, as the $19 billion acquisition of WhatsApp by Facebook raised investor hopes that BlackBerry's own messaging platform may be undervalued. The Toronto Stock Exchange ended up closing up 90.64 points to close at 14,210 on Thursday. And that didn't stop there. The Toronto Venture Exchange had a great week as well, where it reached over 1,000 this week, and it could see its way back above the 1,100 point range last seen in February 2013. Strong U.S. economic data helped offset bearishness in global sectors this week. According to a private survey by Market Magazine, manufacturing in the U.S. grew at the fastest rate in almost 4 years in February. That soothed investor nerves after equivalent surveys in China and Europe disappointed, with Chinese manufacturing falling to a 7-month low, while Europe showed a steady growth but at a slow pace. However, the biggest risk to investors right now is rising geopolitical tensions, particularly in Ukraine, as dozens are killed in protests and the government is threatening more violent crackdowns. With the European Union imposing sanctions on Ukrainian officials and the White House expressing outrage over reports that automatic weapons were used against protesters, the consequences are now impacting markets, as the heavily traded Market Vectors Russia ETF is down nearly 9% year-to-date. If a peaceful solution is not found soon, this will surely affect the European markets at some point, which will rip into the U.S. equity sector, so something to pay attention to. Now over to winners and losers and our picks for the week. The winner for this week is Zale Corporation, ticker symbol ZLC. Shares of the jewelry company soared during pre-market trading when a buyout by rival Signet was announced. The cash purchase amount will be roughly $690 million, which helps send shares to close at nearly $21, a 40% jump from earlier in the week. The consolidation makes business sense across the board, as Zales recently posted profits for the full year after closing underperforming stores, while the combined partnership with Signet provides retail exposure to both Canada and the UK. The loser for this week is Goodrich Petroleum, ticker symbol GDP. Shares took a heavy loss on Thursday, down nearly 20% after earnings results significantly trailed Wall Street expectations. The bearishness was further exacerbated when research firm Macquarie downgraded the company to underperform, citing weak production results in the fourth quarter and liquidity concerns heading into the end of 2013. Now let's take a look at the precious metals sector and what happened this week, starting with gold, where prices took a slight rest during Thursday's market action, settling at $1,310 per troy ounce. However, in the greater context, this was nothing more than a mere inconvenience, as the yellow metal is up over 4% since the beginning of the month. Continued unrest in the geopolitical sphere could send prices higher over the coming weeks, so keep an eye out. Silver had a sharp decline, down almost 2% Thursday and giving up almost all of its gains from the prior session. However, it too has benefited strongly from a resurgence in the commodity sector, up 11.5% for the month. Palladium also absorbed some losses for the day, down nearly 0.5% against the prior. For the month, palladium is up nearly 4.5%, but is no longer the top performing precious metal for the year, with that distinction belonging to silver, up 7.6%. Well, that's it for precious metals, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. Well, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. On Tuesday, Ariad Pharmaceuticals comes out with an EPS estimate call for a loss of 45 cents. Also on Tuesday, Domino's Pizza comes out with an EPS estimate of 76 cents. And on Wednesday, Abercrombie & Fitch comes out with an EPS estimate of 88 cents. The clothing giant announced in January the launch of its new spring ad campaign, Making of a Star, which spotlights a select group of rising actors and musicians who capture the essence of the brand. Now moving over to Canadian stocks to watch next week. On Monday, Pembina Pipeline Corporation will come out with an EPS estimate of 30 cents compared to 40 cents in the prior year quarter. Pembina declared a common share cash dividend for February 2014 of 14 cents per share to be paid, subject to applicable law. And this week, Canadian banks are releasing EPS forecasts, with the Bank of Montreal out on Tuesday with an EPS estimate of $1.55, which is compared to $1.52 in the prior year quarter. And Toronto Dominion Bank is also out on Tuesday with an EPS estimate of $1.04 compared to $1 in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Crush the Street, and BayStreet.ca, I'm Hannah Bernard.